My name is Marcia Greyeyes, and I work at Change Labs. I am the director of co-working, and we're located in Tuba City. And we're open from Monday to Fridays, 10 a.m. to 4 p.m. daily. So if you would like to drop by, we're right behind Denny's. And I'm just going to take this little bit of time to talk a little bit about Change Labs before we get to the main webinar today. So the workspace I had just mentioned is a little studio space that's located behind Denny's, right also to the north of Moenkopi Legacy Inn. And you can come here and do some work, use our internet, print something out, ask a business coach a couple of questions. And speaking of questions, one of the things that we get asked a lot is, how do I start a business? We are here to help you with those answers, dependent upon whether you want to register with the state of Arizona, New Mexico, or even the reservation, Navajo reservation or Hopi reservation. We also offer business coaching every Monday virtually via Google Meet and also through the phone. And every year we bring in 10 high potential Native American entrepreneurs. We select them through an application process, and they usually go through our business incubator program, and it takes a whole year. Another question we get asked a lot is, how do I create a website? We have a resident designer, or we have a design team that can help you answer some of the questions, using them as a resource to figure out whether or not, website is the best idea for you, or if you have another avenue that you would like to explore, they can help you answer some of the tough questions that you might have. And even the type of website that might be suitable for you. We also have a YouTube channel where we have more than 30 videos. A majority of our 2021 workshops are on here. You can access them 24/7, and please follow us, subscribe. Another question we get asked a lot is, how do I get help running my business? We have the creative co-working space, which I've already mentioned before. And we also have an app called Res Rising. This is a yellow page / business page for Native American businesses across the Navajo Reservation, across the Four Corners area. So the idea behind this is, if you were looking for, let's say, somebody that does construction work in the Tuba City area, you would just type in Tuba City, and the idea behind this is that all the construction companies in Tuba City would show up, for example. And we have over 600 Native-owned businesses currently on Res Rising. If you have any more questions, please feel free to email me. My email address is marcia@nativestartup.org. And my name is Marcia Greyeyes. I'd like to ask you to stay on mute until Q&A. Type your questions in the chat, and this session is being recorded. And without further ado, I'd like to turn this over to Angela Bobet. She's a CPA, works out of Flagstaff for Synergy. And today she will be the one that will be presenting on how to file your taxes if you're self-employed. Angela, can you hear me?
Yes, thank you so much, Marcia, for the introduction. I have a little presentation that I'm going to start for everybody, and just kind of gather your questions. There will be a couple of times where we can go through any questions you have. And I'm going to try to give you as many resources, tools that I can to allow you to file your own taxes, and also show you where some of the danger zones are, where maybe you don't want to do things yourself. So with that, I'm going to start by sharing just some of what I've prepared for you today. So the basic approach for DIY tax prep is the idea that you're not paying thousands of dollars for your tax returns to be prepared. Most people can do their tax returns on their own. There's some things that are just a matter of research, or maybe once in your lifetime or twice in your lifetime, meeting with a professional and going over all your questions and giving you all the right knowledge. As it stands right now, taxes are changing because of COVID. There's many tax credits, there's stimulus checks, there's continuing child tax credits that are going to be starting monthly instead of getting them when you get your refund. So there's all these things that are changing. So anytime something changes in life, that's when I recommend, attend some webinars, go to a professional that does them, like Change Labs. So a little bit about me. I have a really strong background in restaurant hospitality. I started working when I was 14 in restaurants. I've opened over 20 Airbnbs now, so I stick with the consulting. I don't do hosting anymore, but I love meeting with people about Airbnbs. I do quite a few business startups, from starting the LLC to creating the websites, as well as the business coaching involved. Marketing and development is one of my passions. I love doing taxes, payroll, accounting. And then our number one staple at our business is our internships and education with NAU, doing free workshops and doing things like this in the community. So that's a little bit about me. And the first thing we want to talk about is, what do you do first when you're going to file your own tax return? So the first thing you do is you look at, where should I start? Should I go to a website? Should I go to a tax professional? Should I turn on paper? So the first thing I would say is, go ahead and go to a software company and see what you want to pay. If you're going with TurboTax, which is probably the most popular, QuickBooks and TurboTax, you're going to pay around $100 when you're self-employed. You also have the option to add on different areas, like I want to have the ability to speak with a CPA. I want someone that's an EA, which is an enrolled agent, or I want to speak with a professional. Then they're going to start a day when you're self-employed. You end up paying $100 to $175 just to file your tax return. So I'm not going to recommend that today, but I just wanted to give some pricing for that. Another area that you could do is you could pay for business coaching. Prepare your tax return, meet with a business coach once every 10 years, and make sure that you're doing it correctly. So that's another option. Another option is if you're in Phoenix or you're in a larger area, or you choose to go down to Phoenix to what they call VITA, which is an IRS group. It's Volunteer Income Tax Assistance. They are free to prepare tax returns. There's just some restrictions, but you could travel and get your tax return done for free by someone that's taken exams with the IRS. And it's a service for people that make less than about $70,000 a year. And then the option that I'm going to recommend today is go to Free Tax USA. That really, truly is free. And you can file your self-employed. To file a state return, it is $15, but it's about as close to e-filing you can do for free. I don't recommend paper filing at all, because that takes a lot more time. And then we'll get to partnerships later. So if you have more than one member of your LLC, you might be a partnership. If you're a partnership, these prices are going to be a little bit different, but essentially you're going to pay around $100 for the software, or you can fill out the paper forms, and we're going to go through that at the end of the presentation today. The next option that everybody has is to go to a tax professional. So of course, I'm in the profession. I'm going to recommend you talk to a professional, but do you really need to do it every single year? And do you have to do it in the prime tax season? Absolutely not. You can get a pretty good deal if you go to a tax accountant anytime later in the year after April. So June, July, August, these accountants are usually on vacation, or they are working and they're willing to work a little bit more for less because it's not the prime tax season. Your prices are going to be the highest when you meet with an accountant January through April. So this is where I would recommend, if you're going to meet with a professional, try to plan it out, meet this time of year, do your business coaching, or just watch a lot of webinars, watch a ton of resources. AICPA has a lot of free webinars out, and so do some of the tax programs. So the next thing, after you've chosen how you're going to file, then you need to look and see what you need to file. Are you filing a 1040? A 1040 is a personal tax return. That's for people that have an LLC, but there's one member. So if I'm the only member of the company, I opened my own LLC, I'm going to file it on a 1040. There's also a form called a 1065, and we're going to review that form at the end of the presentation. The 1065 is a partnership return. That's when you have 2 or more members of the LLC. If you have a W-2, then you're probably not self-employed, but you might have a W-2 and you might be self-employed. And then there's also a form 1099. There's a couple different 1099 forms. There's the NEC, which is a non-employee compensation. That's new as of 2020. And there's also a miscellaneous form. So you could have a miscellaneous form that would be for rent. You could have one for interest. You could have one for royalties. So that's a different form. And then the Schedule C, which is the most popular form for people that are a single member LLC, which is probably most people that are here today. So a little bit more about the Form 1065. So less than 5% of partnerships are self-prepared. It doesn't mean you can't self-prepare this tax form. It just means that it's very complicated. So later on in the presentation, when we go through the form, I'm going to show you the simplest way to do it yourself. And at the end of the day, if you have more complication that we're going over, want to meet with a business coach or a tax professional to learn if you're going to plan on doing it yourself down the line. Okay, so now we've determined where you're going to file. If you're going to file online or if you're going to file, on paper. Then we determined what you're going to file, most likely the 1040 form and a Schedule C. So now everything comes. So organizing your business receipts, adding these things up, and learning the categories that you can use. Some of the categories that are, most people will think that if they go and buy ordinary clothes and wear them at work, it's a write-off. So that is not quite true. So when you're adding up your receipts and getting to these categories, you're going to learn what you can't do. So you can't really write that off. You're not supposed to write off haircuts. Even if you're on a webinar and you're, in front of a camera, you're still not supposed to write off haircuts, makeup, things like that. You also might be thinking that you can write off all of your home utilities. And if you're using a portion of your home, you really should only write off a portion of those utilities. So that's what we're going to go through and some different methods of how you can do your bookkeeping for it. So this right here is a Schedule C. So a Schedule C form has the very simplest way of showing what you can expense. You can expense on the top left, it says advertising, expenses, commissions and fees, contract labor. So all of these things are things that you would write off. Things that are not very common are depletion, depreciation. And if you're the only person that owns the LLC, you probably don't have any employees that have benefit programs. You probably don't have any salaries. So the wages category is not going to be something you use. Now, when I look at this form, my eyes kind of go buggy. So I like using the online e-file where they start walking you through, what do you have? What are you going to use? They start asking you questions and qualifying how you're going to fill out the forms. But that's to the form itself. You could print it on paper, fill it out, add that to your tax return and paper mail it. Just probably not the easiest thing to do. So there's different ways of bookkeeping. So you can use the Schedule C and use that for your bookkeeping. The other thing you can do is fill out a worksheet. I will share these slides to Marcia so that you can have all these. I do have some links throughout, so that you're basically able to, as you go through, there's going to be a lot of resources I'm going to give you. Short, there's simple worksheets. There's Excel. You can use Excel to use for bookkeeping, and you can also use a program. So I took a little screenshot here from my Wave account. You'll put all your bookkeeping in. It has a little bit of a learning curve, same with QuickBooks or other online software, but you can use any of those for your bookkeeping. The biggest thing you want to do is keep it organized. So when you use your business account, Don't use your personal account for business expenses. So as long as you're keeping it organized, you're keeping receipts, you're making sure that you're recording them, you'll be fine when you start your tax return. So I'd love to see in the chat window, if anybody wants to throw this out here, what some of the things are that just scare you about taxes. If anybody has, and please, I mean, I guess you could be like scared of bunny rabbits, but I guess when I think of taxes, I owe a lot of money and I don't know what to do if I owe a lot of money. So that's one of the things. Or if you feel like unmuting and shouting something out, you can do that too. Because I would love to see if anybody has any big phobias. All right, I just see, oh, Summer says, just making sure I'm doing my bookkeeping correctly. Yes, I mean, you can go to school. I went to school for almost 8 years. So it's, get kind of tired of bookkeeping after a while, but it is that bookkeeping looks good. Let's see. Marcia said not understanding a question. So yeah, you like just not it's worded. I think that the IRS is writing a different language. Let's see who else. Marlo says audits from incorrect write-off. So there's certain red flags for audits. So that's knowing what not to do when you're self-employed. Like don't try to write off uniforms for everything. Travel is another area that gives a big red flag to the IRS. And it looks like, let's see. Oh, Darlene, you are so correct. If you can't plan what taxes you're gonna owe, it's really scary because you might actually have you might actually come into a situation where you get IRS letters, and then you're in the situation where you're having to deal with, potential installment plans, which are actually very simple to do. And keeping records for the businesses, bookkeeping, that is such a big part. Let's see. Nathania said, oh, documentation, the amount of documentation. So one thing that's really common is that people ask is, do I need to keep all my receipts? My answer to you is yes. Receipts are very helpful in scanning them in. When you are going through an audit, most likely you're going to go through a paper audit. It's not going to be an IRS agent driving to Arizona, driving up to Flagstaff, or flying to Arizona, driving up to Flagstaff, and then taking the extra trip to anywhere on the outskirts. It's going to be in the mail, and you're going to have to scan everything and mail it back to the IRS. So keeping receipts is really important, and itemized receipts. But I think the most common thing that everybody is having in the chat room is seeing like what things you're going to like what categorize bookkeeping, because bookkeeping really is your write-offs. That's how you're doing it all. So I'll come back to the chat room and keep going the presentation. And some of those you might address closer to the end as well. So one of the most common things that are audited are mileage. So if you keep a mileage log and you file your taxes, then you can know how much you're going to write off, as well as if you're ever audited, you want to keep this and store this. So I have a nice little mileage log that we do for our clients and for anybody that attends a workshop. And like I said, I'll share these with Marcia at the end, so you can all download, go to our website, download the PDF and use it, stick it in your glove compartment and write off your. You're looking at the date that you traveled, where you traveled from, or you're traveling to, how many total miles. And this year you get to write off 56 cents a mile. So if you drive 3,000 miles, that's a pretty decent write-off. It's a little over $1,500. So you want to keep track of all of your mileage. So that is going to be a category that's huge with another area about the mileage log is, let's say you drive to Phoenix and you write off the mileage to Phoenix. And while you're in Phoenix, you primarily went down there to attend a seminar or to meet with a client. But then while you were there, you also had dinner with a friend. A lot of people ask, well, can you still write off the mileage? And the answer is yes. You had to go down to Phoenix. You had to do that for business. And if you're mixing a little bit of personal stuff when you're doing your business, you're just not going to deduct that meal maybe for the travel, but you can still deduct the mileage. So off. Most people, when we do their Schedule C tax returns, they're desperately needing to count their mileage. I think it's a pretty big red flag when you use even numbers. I doubt anyone will have exactly 10,000 miles that they write off. But if you keep track of it and you total it up, it's probably going to be 9,958. So that's a really good thing to keep in your car, is to count and to do your mileage. So the next thing is looking at preparing your taxes. And I'm going to jump off the presentation, and I'm actually going to go to a website, and I'm going to show you exactly how I signed up for this website and how I'm putting in the information to prepare your taxes. Then we're going to full circle back to the bookkeeping and categorizing and write-offs, because I think that was really important in the chat room. And it's also really important because at the end of the day, when you're categorizing everything, if you see the tax return and then you do your bookkeeping, it is much more, it clicks. You say, oh, well, now I know where I'm going to be at the end of the day. So what I'll do is fill out the basic information with you, and then add in the bookkeeping information as we talk more about bookkeeping and write-offs. And then we're going to talk about some of the personal information, because everyone, even though you're doing your business tax return, you are going to have a little bit of knowledge about the personal information and credits. So that the one that's most common is the child tax credit. If you have children, that means you're getting, a certain amount for each child. You're also going to look at if you make under, $12,000 a year, and depending on if you're married, if you have kids, you might qualify for an earned income credit. We're going to look at stimulus payments. That is going to be for the 2020 tax returns, and next year for 2021. They did several installments of the stimulus payments. The most recent one was $1,400. That was sometime in February, March. A lot of people got them. But if you missed out on any of your stimulus payments, they actually go through your tax return, and that's where you get the credit, the dollars back, either as applied to your tax debt or maybe even as a refund. And then another area of credits is school tuition. And then I'm also going to send with the slides, the Arizona state tax credits. Arizona, if you file in Arizona and you're required to file in Arizona, there are certain state charities where you can donate to. And if you donate to these charities, you take that full dollar for dollar, 100% of it off your tax debt to Arizona. Now, there's a lot of people that don't file taxes in Arizona. The ruling with the state of Arizona is that if you live on the reservation and you work on the reservation, and your clients or the people that pay you, their monies are coming from the reservation, you are not required to file Arizona state taxes. There is a little bit of not a rumor, but I guess it's a misunderstanding of that rule. A lot of people forget the third part of that rule, and they say, well, if you live on the res and you work on the res, then you don't have to pay state tax. That's only partially true. The other part of the rule is that the clients that you have, they also have to live on the reservation. So if you're going down to Flagstaff and you're actually selling to people in Flagstaff, and those people in Flagstaff live in Flagstaff and they work for W.L. Gore, well, that's not going to qualify you for the exemption. Now, the other part of it is who's ever going to know, and will the state ever find out? Probably not. But it's just very clear. We want to make sure everyone's clear on that rule for the exception of filing. Okay, so now I'm going to walk through just the filing of doing the tax return. And I am going to share, and I'm hoping that you can see our website. And I'm going to go to Free Tax USA. And if anybody has the opportunity to give me a thumbs up or type in the chat room, can you all see the Free Tax USA? Okay, thank you. All right, so I created an account and I'm signing in. And this is exactly how you would see this walking through to file your tax return. Now, there's a lot of things in here that you can just do based on intuition, reading, and Googling. But I'm going to go through the Schedule C, because the whole point of the DIY taxes when you have an LLC is that if you're the only member of that LLC, this is what you're going to do. So Free Tax USA is the one I chose. It's on the IRS website, and it truly is free. You can sign up for $7 for audit support. I think it's a great value, as opposed to Intuit and TurboTax, which is $100+ to do all this. So this one I would say is truly free. The state return to e-file is $15. That's the only downside, is that they all charge extra for the state return, because the free tax e-filing is a federal campaign. So it's the federal government that's subsidizing all of the free tax software. It's not the state government. The state probably could care less. So we will look at the first part of it is when you get it. So one of the questions in the chat is, food for 1099 workers to keep working on a project, is it okay to write off? I will show you where that is. There is a write-off for food, and I'm going to talk about the 1099 workers. So if you're a 1099 worker, you are a contract worker, you're not an employee, you receive a 1099 NEC or the 1099 miscellaneous. So that's where we're getting the Schedule C. But it can also be your LLC, because if your LLC receives this, then that's where you're going to end up claiming the income. So what I did is I went ahead and I entered a 1099 NEC or miscellaneous form. The other thing that you could get is if you receive payments through a credit card, you might have a form that's called a 1099K. Now, a 1099K is basically the requirement if you make over a certain amount of money that you're going to end up getting, so something from eBay, PayPal, a credit card company. So with any of those, that's why you're getting that form. So once you enter that in, then you would go to the next part, which is your Schedule C. So when you're filing it, you're going to enter in where you got the 1099 from, and you're going to put it in as the person that paid the information. So that's the employer or the company that you worked for. And then it's going to ask you, is the recipient's ID number for your business. And so if you are the recipient and you're a single member LLC, this is where you're going to put in your EIN number. But if it's not, and it's just yourself, it'll be your social security number. So what I want to do is I want to put in the EIN, and I'm going to create my business. And then I'm going to type in the address. I'm going to do everything the same from there. And I'm going to put in, it just tells you, basically you take the form and you fill in everything that you see on the form. It's telling me I have to have a certain number of numbers. Okay. And then it's going to ask me if this is for a farm, rental for the farm. And that's where I want to make sure that I'm choosing business income Schedule C. So the next thing it's going to ask me to do is to talk about this business description. So if I put in business description as accounting, it gives you some examples on the top. The more vague, the better. And then it asks me about if I have any other forms, if I have any other income that wasn't reported. Most likely I have some cash income. I'm not just going to choose what my 1099 said. I'm going to have some cash income. So I'm going to select that and continue. And then it asks, what other gross receipts do I have that are not on there? And I'm just going to say, let's say I collected $2,000 in other kinds of income. And this area is very similar to what's on the Schedule C. Did you give any returns, or did you return anything back? If that's the case, you can enter any number here. You can also put anything that you had for, let's say that you had not considered, then you can add more income, miscellaneous income. So there's all these different ways for you to claim more income. Then the next part is going through and seeing, where do I have my most common expenses? This is going to be for, like we talked about, the mileage. So that's car and truck expenses. I'm in my home office right now. I have a designated space. It's 200 square feet. It is just for my home office. I have little decorations in here that I bought for my home office. I have my computer, office furniture. I have a fan. I have a webcam, so I have all these things that I bought for work. So I'm going to claim all those. And then it says, do I have any other expenses? I'm going to say, yes, I definitely have other expenses. So now we're going to go through and see how to enter all these things. And this goes back to bookkeeping, because if you don't have all these things ready, you're not going to be ready to file your tax return. So here we have vehicle expenses, and they're going to ask me the same thing that's on my mileage information, the make and the model of the vehicle. And then what type of vehicle is it? Well, it's definitely not a truck, but it is an SUV, so I can choose that. I might have a heavy duty, I might run a trucking company, and I might actually have one that's even bigger than that. So you can choose which you have. And then you're going to say what date it placed in service. Well, it could have been placed in service before this year, but I'm going to say, since I'm filing my 2020 tax returns, that it started the 1st of January 2020. And then it's asking, this is to see, are you getting everything you need? Did you purchase this vehicle new? So yes or no. No, I purchased it used. And if you had sold the vehicle during 2020, you had the option there as well. Now, this is where I was mentioning, you might not want to use whole numbers for business miles. You want to count up all your miles and be very accurate. And so that was my business miles for 2020. Commuting miles are not deductible. So if you're commuting from your home to your office, that's not deductible. But if you're commuting from your office to your client's office, that is deductible. I don't have any commuting miles from last year, but you can also put in other personal miles. And so that would be things outside of the business miles. And you can put in an average daily commute, but I just leave that blank. And then the other question they have is, was it used for hire? Like, were you doing an Uber? Was it used for something else? And then you would fill that information out. So you're really just walking through these forms to be able to e-file. And then it goes through a lot more questions. You always want to be able to support your mileage by written evidence. This would be an audit red flag. Is your supporting evidence written? No. Okay, now we're going to audit you. So you want to make sure that you do support your evidence by writing it in a mileage log. And then it's asking if we own or lease the vehicle. So I'm going to put in that I own the vehicle. So we continue to look and see, each of these questions. And then at some point you might have a question about just the taxes in general, or it didn't ask me about this write-off, but can I still write it off? And that's why we do these type of webinars. And that's why we have basically, these tutorials, but also where you can meet with a business coach once every 10 years and get to know the up-to-date information and when you fill out your own taxes. Let's see. So then they're asking about, this is where I go into, if you're doing it yourself, depreciation gets a little bit confusing, but I think they walk you through pretty well. And it's asking, do you want to use actual expenses or do you want to use the standard mileage? It's going to tell me right here, if I take the mileage that I typed in, it's $3,789. Well, if I bought this vehicle used for $4,000, I'm not going to be able to expense it all at once in most cases. And I'm probably not going to be able to expense it in future years if I do the mileage. So it really depends on if you're primarily going to get new vehicles every few years, you're going to have a lot of expenses for your vehicle, then it might be better to use the actual and then fill out all the information. Today, because we only have an hour and a half and we're basically going through 2 tax forms, we're just gonna stick with the standard mileage because that's going to be quite a bit of a write-off. So this is the time where we can put in, if we want to put in actual business expenses. Since we already did mileage, we don't need to, but you could if you wanted to see if you added up more than $3,000. So let's say I paid $200 in parking fees, tax and license on the vehicle. Let's say I paid it all at once and it was $800 for the next 5 years, but I paid it in 2020. I'm going to write that full amount into the taxes paid. And let's say I have a really horrible loan and I paid $6,000 in basically the car loan interest. So typically what these programs will do is they'll say, well, do you want to see if it's more or less? And I think at this point, we'll just keep going, but that's just a heads up. When you're doing vehicles, it might be more advantageous to do actual than actual expenses, where we added them up like standard mileage. And then it's asking, do I use part of my home for business? And I'm going to say yes, because most people are going to be, especially with COVID, working out of their home. So the home office description could just be described as home office. You don't have to go into too much detail. The simplified method typically is the easiest. So I like using the simplified method. So this is where I say I have 200 square feet. That's my business office. And my square footage of my home is 900. So at that point, it's going to give me a pretty good ratio. If you have a bigger home, you might be better off using the non-simplified method. But just to keep it, pretty simple, that's what I'm going to put in here. And I don't use part of my home as a daycare facility. So that's not part of my business. And typically most people have one home office. So you would just continue to the next part of the form. So the next part of the form is something where if you have purchased large items, you didn't purchase it used, you purchased it brand new, and you bought a $5,000 TV that you use for business. So this is where you're going to enter in a depreciable asset. So let's say I bought a laptop. I'm going to go ahead and put laptop. And maybe because down the line I'll buy more, I'm just going to detail a little bit more that says Dell. And I bought it February 1st, 2020. And I purchased it new and I didn't get rid of it during the year. And let's say I only use this laptop for business and I bought it for $900. So at that point, I'm just following each of these items that are, in a row. Now they're going to ask me what category is it in? So how long is it going to depreciate? And then I'm going to enter that, go to the next part. And this is basically all part of the write-offs. This next part is what they call a Section 179 expense. It's saying, do you want to depreciate the whole laptop? And I'm going to say yes, because every couple of years I break a laptop and get a new one. So I can enter that full amount in. And this is a lot more information than just for, a quick webinar, but I would say for the most part, your computers, your cell phones, you replace them every 1 or 2 years. And you can take a full write-off of them. If it's something that you're only going to replace once every 5 years, then you probably want to spread out that expense over 5 years. And that's what depreciation is. It's just spreading out the expense over several years. And I'll say, no, that's the only one that I had. So then I continue to the next area. And then it says, what other of these common expenses do you have? Did you have contract labor? Well, I did. I paid someone to clean my home office throughout the year, and I added up all the receipts. It was $300 total. I did pay some referral fees. I had someone helping, and I gave them a referral fee and paid them $50. I didn't have any wages because I didn't have any employees. And because I didn't have any employees, I didn't have any employee benefit programs. I didn't put any money for employees into a pension or profit sharing. When you own your own LLC, what you pay yourself is not the wages. What you pay yourself is separate from wages. That means if you're paying an employee. So you hired an employee, you paid them, you filed the payroll taxes. That's like someone completely separate. But let's say that in my business, sometimes I have to do repairs and maintenance in either my home office, or let's say part of it is that I'm operating another office place and I have to pay for repairs and maintenance there. So I might have some repairs and maintenance. I took a trip and I flew on an airplane and probably not during COVID in 2020, but let's say you did. Let's say that you spent $800 on the flight and then you spent $800 on hotel and it was 100% business. Well, that's $1,600 right there for business travel. Then you have insurance, and it's not health insurance. So you paid for general liability insurance, $300. I had to pay for a City of Flagstaff license for businesses. So that's there. And then I paid a business coach for 1 hour of coaching. So I'm putting that in there. These are all bookkeeping. So before I even started the tax return, I have all these worksheets so that I can see what I'm going to have here as totals. And so let's say as part of my operations, I do purchase supplies. I do a customized business coaching binder, and I have a calculator, and I had to buy all these supplies to put it into this little package. And so I had some, I put a Facebook ad up, that was $25. I had to buy a new keyboard, that was $40. And then I already used my home office, but I also have a second office place, and I had to pay utilities for the year. So I'm going to put some utilities in there. And then I didn't have any rental equipment, but I did have to pay for that office. So I only paid $500 for the office. I got a really great deal on it. I don't own the office, so I don't have any mortgage interest. But I did put some things on a business credit card, and I had to use that credit card and pay some interest on that. And depletion is something that we're probably going to come back to because not a lot of people will have depletion on there. Now, one of the questions was, can you write off meals while you're working on a project? So in short, it's not the best thing to write off, but there are certain professions where it's really common. So let's say you're a plumber and your office is in Flagstaff, but you do plumbing all the way into Utah. And you do leave every day, but you come home every night, and you just go from one home to the next. Well, when you run over to Burger King and you went from the Smith's house to the Brown's house, well, you get to expense that meal in between when you're traveling between. And that's what I think of when I think of when you're a 1099 worker and can you write off the food? Well, the question is, can you leave work? Can you leave the project? Or do you basically have to go from one place to the next? Let's say you're a painter and you're painting different houses and you have to go from one to the next and you can't stop to eat. You just grab food on the go. So that's where it becomes that 100% write-off. So that's when we do declare the business meals. Now, there are limits on certain meals. So most meals are 50%. That's what they used to call meals and entertainment. It's when you're basically working with a partner or a client and you order in coffee. That's 50%. The only exception to that will be 2021, I believe 2022, they passed a tax law that if you're at a full sit-down restaurant, you can write off 100% of that meal because they're stimulating the economy. So if you like to go out to eat for your business, know that especially for 2021, you'll be able to write off 100% of that. So this one right here is telling you enter all the meals that you had. So I'm writing in the whole number. They're going to do the math on the back side. If you have Department of Transportation, that's probably not very many people. But when we were talking about the meals between projects, that's going to be the one at the bottom. So let's say I spent $10 a week, it was $520. Some of these I'm not going to go through because they're really unique and it would take up most of the time to explain. But I wanted to touch on miscellaneous expense. So much like the IRS asking you if you have substantiation or evidence to prove you have a mileage deduction, this is it's a way that they can use as a red flag to audit. So if someone says they're scared of auditing, try not to type anything in here if you're scared of audits. This is going to be something where I'll give you a list of really common expenses that you can use. The top one is going to be telephone. So the telephone expenses that aren't on the original form that hasn't changed for so many years, a lot of people are going to have a telephone expense. So that's one area. Another one is bank fees. Bank fees are very common when you have a business account or if you're using a credit card processor. And so those bank fees are going to be on there, and that's really common. Outside of those two things, this is where you get in trouble. So let's say you start typing in uniforms, dry cleaning, and donations. Those are probably three things you don't want to include because donations are not a write-off for your business. Dry cleaning is usually only for military or really specific businesses. And uniforms you might, but unless you're a welder or you have a job that requires you to have like metal-toed boots, if you have steel-toed boots, if you have fireproof clothing, if you're required to have specific things that are only for that industry, then you might have uniforms. But it's just not very very common. Let's see, question, oh, I missed a couple questions. So I'll pause real quick. One of the questions is about the business mileage. I think I understand it. It says this is for each business vehicles if you have more than one vehicle. Yeah, you would fill out a mileage kind of questionnaire for every single vehicle you use. So if you have 2 or 3 vehicles that you're using, you might have 2 or 3 on the tax return. If you have 2 or 3 different jobs that are self-employed, let's say one is a driver for Uber and the other one is a jewelry making business, you could have 2 Schedule Cs. So I'm filling this out for one business, but you could have 2 or 3 vehicles. You could have 2 or 3 businesses that are just like this. Then the other question is, can you put donations towards Goodwill? I'm assuming, Delphina, you can just give me a nod. Are you talking about Goodwill, like dropping off a bag of clothes? Like at the Goodwill office? Because if that's the case, you can't write it off on your business. There's a way you can do it on your personal tax return. But in most parts, there's, Goodwill is an advertising. Let's direct message about that. I'll shoot it up in an email and I'll post it on our website. So we have a little knowledge base on it. I'll get your information after Zoom because I just want to make sure I understand. And we'll come back to that. So Joseph asks, do people just keep an electronic log or paper log for mileage? Yes, absolutely. So if you are putting it in a little notebook or you have it on your phone, those are great ways of keeping your mileage log. A way not to keep mileage records is putting it on Post-its and putting them in a bag. That's probably not the best way. And then if you have gifts purchased for employees, there is an IRS ruling. I believe it's $25 or $26. So if you're giving employees gifts, the question was, can you write off gifts purchased for employees? So let's say you get them a Christmas gift or a St. Patrick's Day gift. Well, if the gift value is under $26, yes, you can write off that gift. If you start doing it more than, if you do more than $26, then you're technically supposed to tax them on their pay stub. So what I usually do is like a $25 gift card, or I just buy them lunch for everybody. And that way I know I'm following that rule. So the next area of the Schedule C is new as of, I think it was 2017 or 2016. It's called QBID, Qualified Business Income Deduction. And basically, they just want to ask a couple questions to make sure that you could have this additional business deduction. So most commonly, is it connected with conduct in the United States? Yes. Almost everyone's going to answer that yes. And then are you providing services to a former employer that are substantially the same as when you were an employee? And most of that is going to say no. So that's the most common responses to those questions. And then basically it says that we've calculated your qualified business income as a negative. So I've written off so many things that I have no income. It says, do you want to use the QBI we calculated above? And we'll just go ahead and say yes, because other things could change. And then after you finished, it's asking, will your taxable income be more than $163,000? And most likely it's going to be no. There are certain people that don't qualify for, it's a more of a middle range that you qualify for this. And so one of the questions in the chat was for the home office expenses, what utilities can you write off? So what I did, I'm going to go in and edit the Schedule C that we started. One of the questions that I had answered was, did I want to simplify the home office deduction, or did I want to do it itemized? Well, I simplified it because that was just, it's a little bit easier. If I didn't simplify it, then I would have had to add up all of the utilities. So the utilities like cable internet is going to be a percentage. So if your home office is, let's say 100 square feet and your home is 1,000 square feet, it's 10% of your home. So then you can claim 10% of all the utilities you use for your home office, which could include water. If you clean Airbnbs and you use your own washer and dryer, you might use quite a bit of water, electricity, and internet. So that's why I chose the simplified, because the other one could take you a half hour to fill out. And so I was trying to, you know, kind of simplify that. But if you go to the, and we're going to edit that, and we say, do you want to use a simplified method? And I say no, it's still going to ask me the square footage of the home. And when I started using it for a business, and it says, do you own that home? I'm going to say yes. And it wasn't used as daycare. Now here's where we have direct expenses and indirect expenses. So the mortgage interest, real estate taxes, all of this is an indirect expense. The direct expense would be, for instance, let's say I just repaired my office where I was in, just the room. I just put some new paint up on the walls, repair and maintenance for that. But let's say that I paid, you know, $8,000 for the year in rent. That would be indirect. And your cable internet would be right here under utilities. So that's where you can basically go in and separate everything. So if you did that, it might be a little bit different than the simplified version. And so I'm just going to skip through all of these. So that in that way, I was just keeping it simple, but you can go in there and you can fill out a whole lot more information. So another question that came into the chat, can I claim gifts I give to my patients? So if you have patients, clients, customers, you can write off gifts to them as well. There are limits to the IRS. So you just have to reference kind of like the employee gift. And if there's something nice that you're doing, that's just a gift, you can actually count it as like if you're giving them a cash bonus, like $200, but their bill was $2,000, you can actually count it as a refund or a return. And then also if you are doing something as marketing, so let's say I buy a bunch of t-shirts and I buy them with my logo on them and I give that to my clients. Well, that's no longer a gift, that's marketing cost. So it just depends. It could get more specific about what you call it and what you're doing. But for the most part, yes, you can deduct gifts to clients. Cell service plan that has both business and personal together, that's going to be similar to the home office. It might be 50%, it might be 100%. We have a cell phone at our office that's through Verizon Business. So Verizon Business, those are all 100% costs that are going through the business. So basically we filled out, this is what would be a personal tax return. Now, when we're all done with it, you're going to have a few personal things. You're going to have, you're going to have to fill out the rest of the forms that are more for personal than business, but essentially that was your business tax return if you have one LLC or one member LLC. So what do you do if you work with a partner? So when you're on the IRS website and you're applying for an EIN, an employer identification number, you filed for your LLC, let's say you and your best friend just started this new business. What do you do and how do you file that kind of tax return? If anybody that's watching today has a partnership that you have an LLC with a partner, go ahead and give me a shout out in the chat room so I know who to direct this towards. But basically this form, this form is the 1065. That's what I brought up a little bit earlier. So perfect. Joseph said immediately right here. So Joseph, congrats. You have to file a really complicated tax return. Just kidding. It's not that complicated, but basically it's a little bit more complicated. I have a screenshot of the 1065 in front of us. The good news is that if you're making over $250,000 a year, you can pay an accountant $400 or $600 to file it. That's the good news. Because if you're making under 250,000 gross receipts or assets per year, that's a little bit better. You don't have to file the more complicated parts, which is called a Schedule L. So what I'll do is I'm going to continue through and I'm going to go through some of the key items on that 1065 form. I do consider the 1065 basically advanced. I think it's very advanced. If you're hitting depreciation, capital gains, or in general, you're just filing the 1065, or you have very advanced categories. You have a unique business that not other people have. You might be in the DIY, what I call the expert level. You have to go to lots of webinars. You have to hire a business coach. or go to Change Labs and have a business coach there, so that at least you're putting in that knowledge and you're learning. So I'm going to skip over to that form, the 1065 form. And essentially the 1065 form, you can paper file. There's only a couple parts in it. The one that I think is the most complicated is called a Schedule K, as in kind. The Schedule K is what you are, or a K1 is also called a K1. A K1 is where you're saying, I have a partner and this is the amount that my partner has. And so I didn't actually have that. So I'm going to pull up a K1. And there are specific K1s or Schedule K for each tax return. So you want to make sure that you pick the 1065 and you want to choose the correct tax year. So you fill out all the information. The business code number is called an NAICS code, and you can look that up as well. So I usually don't have them memorized. They're so complicated. So you can see I've already looked up NAICS for 501c3 and art or other things. So you look up the NAICS code and then you fill out the name of the partnership. You can look at the EIN, the date the business started, and then the total assets. So if you only have a checking account and a car in the business name, then you have $10,000 in a checking account and a $10,000 car, you're only going to have $20,000 in total assets. But the IRS is looking at this to make sure you're under 250,000 to see if you have to fill out other things. So the one that I was mentioning earlier was the Schedule L. So the Schedule L is right here. This is your balance sheet. That's where I was saying this form can get quite a bit more complicated. Quick question. Millard in the chat room said, if a married couple applies for an LLC, are they considered a partnership or sole member LLC? So when you filled out your EIN application online, it asks you, do you want to file, are the two people in the LLC married? This I'm going to take a little left turn down Tangent Alley because I really want to show you where a lot of people get in trouble for, let's see, I have to go to EIN application. There we go. So when you're going to apply for your EIN and you are filling out the application, you have a choice right here if you want to apply as a sole proprietor, a partnership, or an LLC. When you file for your LLC, and your two people that are married, you have the option of saying there's two members, and I'll just pick Arizona, otherwise it'll let me go forward. It's going to say right here, are the members husband and wife? If you are husband and wife, it will give you the option. Do you want to elect to be classified as multi-member? So that means you'd have to file the 1065, or do you want to be classified as a single member? And the answer to that is, how big is your company? Are you going to sell it one day? You know, there's a lot of things that go into it, but I would say 90% of people can elect to be a single member LLC and just fill out the regular form we did in the first part of the presentation today. And so once you go through and you want to just see the most simple things that you have to fill out on the 1065, the biggest one, and this is the same as the Schedule C, is going to be the gross receipts or sales. So I'm going to put in my $100,000 there. And then I'm going to say that I don't have any cost of goods sold, but if you're doing a tax software, this is going to fill it out for you. And then you're going to say, what is my total gross income? And basically, it's just going to be 100,000. If you don't have any salaries, you most likely don't have guaranteed payments. Let's say you have $100 in maintenance. You have $5,000 in debt. You don't have any employees. You don't have any of these other things. You don't have any taxes and license. But let's say that you have a list of all other items, which could be, everything that we filled out: telephone, utilities, rent, or well, I guess rent's on there, but telephone, utilities, uniforms, all these other deductions, you can actually attach a separate statement and detail all those out. you can detail it to your heart's content. If you're buying a tax program, I wouldn't recommend filling this form out on paper. The tax program is about $100 if you just buy a 1065 program and just do it every year. So it's really not too bad. But if you did it over as a form, your business isn't going to owe any taxes. You're just going to deduct everything you have. And then you're going to say, what is my ordinary income? And you're just going to fill it out in the tax software. So it's really not too complicated. It's the same as the e-filing for personals. The part that you have to make sure to fill out correctly is the Schedule K. And the Schedule K is where you have, let's say that you have so much income. So in this scenario, it was $100,000. I only deducted $5,100. So the total income is $94,900. Well, you just have to be able to say, if I have two partners, what is half of that? And then you would put in half of that. And you would have to know what these categories are. Most of the programs are going to do that yourself, where you have to know if you're a general partner or a limited partner. You can't be both. So you pick one or the other. You would put in the partnership. The tax program is probably going to put all that in there for you. And then you're going to say if everyone is 50-50, if there's two people, you're probably going to be 50-50. So you're going to fill out all this information. And that's why a lot of times when you're a partnership, it is easier to just go to a tax professional for the time. If it takes you 10 hours to fill it out or $400, it just depends on what your time is worth. Now, back to the married couple applying for the EIN. If you are filling out that application and you choose to do a single member LLC, you're filling it out on the 1040 form, which is the one we used on the Free Tax USA. That's the free form, the Schedule C. But if you're married and you elect to be a multi-member, the IRS is waiting for you to file the 1065. So you have a couple options. You can just file a new EIN and do it as single, or you can just start filing the 1065 form. And that's where we say, that's where it can get a little bit complicated. Maybe it's not as much of a DIY, but you can purchase software similar to the Free Tax USA, but they don't do free taxes for business. So you'd have to purchase a software around $100 just to file your, your 1065 form. So with that, I think we're pretty close to hitting some of our time for being able to do questions. And we always like at the end of a workshop to give you a goal. What are you working on next? So I think the big takeaway, if you're going to take one big thing away today about doing your own taxes, that number one thing would be to complete your bookkeeping. So I'm going to go through a bunch of different resources, but I want to give the opportunity to open up the chat and see if, instead of typing in the chat, does anybody have any questions? I guess you can type it in the chat if you want, but we can just open it up. If anybody has any questions, if you wanted to shout them out, you can put them in the chat room, anything like that. Nobody has any questions?
I'll ask the question. This is Joe.
Sure. Hey, Joe.
Do places like United Way still do that VITA tax prep? And if they do they also help with businesses, maybe up with the income of under a certain amount? I can't remember if there's something like that available in communities like Flagstaff.
Yeah. So last year we researched this for a lot of clients, and United Way didn't have a VITA site. There was another group in town that was, I think, called Northern Financial that did it that used to do it at the community center. And so last year there wasn't really anywhere in Flagstaff that was doing VITA. I think they stopped doing it over the last couple of years. And I used to work with the woman that did it. She's actually over at a different tax firm. She works at a tax firm now, the one that used to do the program. And my advice would be to try to see where they do it in Phoenix. You might have to take a little bit of a trip down there. But Phoenix has just such a bigger community that they have several different grants to do the VITA taxes, to do them for free. And they only do the single member. They'll do a Schedule C and the 1040 if you're under the income level. But I'm not aware of any free resources for business and business taxes to that scale. What we do as a firm is we just do coaching with clients. So 4 years ago, we had a client that was doing it themselves. and they were a little bit lower on income, just doing carpet cleaning company. And this last year, they actually came to us and said, can you just file them? I'm too busy. So that's ideal, is that you learn how to do it. You learn how to do your bookkeeping. You can do some of the tax return, but then maybe when you get too busy, you can't. Let's see, Carlin has his hand raised.
Hi, good morning, everybody. I have a quick question regarding the differences between a business and a hobby. Can everybody hear me?
Sure. So in terms of the IRS, a business is what you're operating for your income. You're living off of it. So you're receiving income. It's significant. It's not just something like a lemonade stand, I should say. And so if you are dependent on that income to live, then it's your business. It's really frowned upon to, let's say my hobby was cameras, and I started on the side, I started a photography business, and I bought $30,000 worth of cameras, but I'm only charging $50 a photo, and let's say I only made $300 this year. Well, if I do that for several years, it's going to be very frowned upon by the IRS/criminal, because I'm not doing it as a primary source. It's not my income. It's basically as a write-off. So if you think about the Schedule C, the Schedule C is a positive income. So 10,000 of income, 5,000 of expenses. It means I kept $5,000 after expenses. So that's a business. If I had 5,000 of income and 10,000 of expenses, that means I have negative $5,000 from this LLC. And now I'm using it just as a tax write-off. And that's very bad. So that's where it's the hobby that you don't want to do. It's reasonable. There's a rule or a law. It's the right to profit. You have a right to profit. You have the right for your opening a business and trying really hard and having a loss for a couple of years. As a conservative firm, we don't recommend doing that loss for more than 3 years. If you're taking a loss for 3 years, it's a pretty big red flag. And as a client, we wouldn't feel comfortable working with someone that was just trying to use it as a write-off. We've actually had clients that we've parted ways because of that really strong stance of being conservative, because we don't want our clients to be audited. We don't want you to get in trouble with the law. So does that answer your question and the differences?
Absolutely. Yes. Thank you. Yeah, my thing was I'm pretty diligent about the bookkeeping. And so I just like try to lay in as many deductions as I can. And I don't want to go into that portion to where I start taking a negative income every single tax year. So that's what I want to see. I'm like, how long is it, are you able to kind of keep that kind of stance without raising any red flags? So thank you very much. I appreciate it.
Absolutely. There's also some statistics as terms of where you live and what your income should be. So the poverty level line is about 12,000. So if you're at 12,000 of income, you're according to the IRS, you're at the poverty line. So at 12,000 of income, and that would mean all income sources. So that could be family income, things that you get from friends are not necessarily income. But let's say that like your parents passed away and you use that to live off of. Well, that's not necessarily, they're looking at someone who has no other sources of income could live off of $12,000. So if you're constantly filing the tax return and you have less than that, then you should just be ready to get audited. I mean, if you're trying to get earned income credits and you have, you somehow live off of $5,000 a year and the area average income is 80,000, like in Flagstaff, I think the average income is closer to 70 or 80,000. And so if you're living on a much lower line, you should just be prepared that there might be some red flags there.
Okay. All right. Thank you very much. I appreciate it.
Absolutely. Joe has, you have your hand raised there.
If there are some grants or philanthropy donations that I'm going to receive, and part of the requirements is that, I have all my tax returns and I need to have an audit within the last year to provide them. Is that just some type of financial audit, or what kind of audits are there, like aside from the IRS audit?
Is it for a nonprofit?
No, not a nonprofit, but I am filing for a nonprofit over the course of this year.
Okay. So I've never heard of an individual being required to have an audit. It's most likely because of the nonprofit grants you're applying for. in the applications, a lot of times they will require an audit have been performed on the organization. So if it's specific for your business and your LLC, I would just ask them. Typically, audits are very pricey. You would hire and basically an external third-party auditor to audit your financials and your tax return for your business. So that's I'm thinking what it would be, but without looking at the specific wording, I'm just using a nonprofit is where the grant is for.
Okay, thank you.
Christina had asked, how do I label my bookkeeping expenses on my spreadsheet? And I was let me share with you, I have a couple of resources that are at the end of the presentation. I'm just going to open them up real quick. So we've had over the years, a lot of clients ask us for resources and we've added them to our website. One of them, you can download this Excel, and the Excel spreadsheet, you can manipulate it to do it for your business. You can do it every month. You can do it just once per year. But what we did was we created an Excel sheet that has all the different categories that you could use for your business write-offs. And that's what we use to help, organize the receipts, organize the bookkeeping. And so then when you go on here, and I'll just do this because you might have two windows open. So in the chat room, I'm just gonna send you a link so you can click on that. And then in there, you can actually click on it, and there's a little link. It says business deductions for clients. It says check out our business deductions worksheet on Excel. So then you can actually click on it in Excel and download it from our website. And then there's also a PDF version because some people like just doing it from print it on paper and just add it up that way. So when you click on the business deductions for clients, it goes to the website that has the actual link, and then you can just download the Excel from there. And then that way you can use it. I don't know if it's a template per se. Well, I guess it is. But you can definitely use that. And I think it will help you if you're labeling the different expenses, because there really are, for a company, there are so many different things you can write off. So a yoga instructor might write off education and training to do a hot yoga course that they took. Dues and subscriptions. Like I use my Amazon account for work. So I have a work Amazon account. I order tons of stuff from Amazon, which is probably horrible. But I write it off my $99 a year to dues and subscriptions because I use that 100% for work. So you might be paying separately for delivery. If you have something you're selling and paying someone to go deliver it, you might have a delivery expense. So what we did at the beginning of the workshop was fairly simple. I guess I consider them simple categories like telephone, mileage, home office. But there are so many different categories that you can write things off, and you can go to school for 20 years for it. But one of those is gifts. So someone had asked about gifts for clients or gifts for employees, but there's a gifts write-off. There's independent contractor write-off. There's also different kinds of insurances. So the more you do in business, the more these categories make sense. But I hope that answers some of the questions that you all had for the different types. And with that said, I think that at the end, I'll send these slides all over to Marcia. And I have on there a personal budget spreadsheet. That just helps with being able to look at your personal budget, trying to add cash flow to your life. There's also an area for state tax credits. So state tax credits in Arizona, I have some links on our website, but basically if you're donating to a public school like Flagstaff Unified School District, you can write that off on your state tax. So if you're filing state taxes, that counts the same as paying the state or paying a charity. So I always kind of opt for paying a charity. So that's a nice little area that we have resources for you. Another area is new hire packets. I think the one I have on here is for 2020, but it's the same general idea. You can Google 2021 W4, and each of these items you have to have your employees fill out. But I just put them all in one place so you knew everything you have to get for employees and deposit form, everything else. So each of these have, and you can download it from the website. So that's a nice little way to stay organized when you're hiring. There's also a year-end checklist. So at the end of the year, there are just some things, I call it adulting. No one likes adulting. We all do it. Well, we love coffee, but we don't like adulting. So a lot of what I do is I prepare everybody for tax season. So my partner is licensed in tax. He's an enrolled agent with the IRS. And basically everything else. I prepare all the businesses for taxes. I do the bookkeeping, do retirement plans, life insurance. Oh yeah, there is one little thing. I did adopt a puppy a couple years ago. So somehow that made the adulting list, but there's other things on there really important, like paying your quarterly taxes, looking at your health insurance policies, keeping your bookkeeping up to date. So I think that's a really nice, very concise checklist for the year end. And then I do have a tax prep checklist. And the tax prep checklist, this is all the things that you might receive, that you might want to keep, and that you would be bringing into your taxes. Or if you're doing your taxes yourself, these are all the things that you want to combine. So there's a form called 1099 SA. It's a Medicare Advantage MSA. There's so many different forms that you can get from healthcare that are now on your taxes. So these are all things that you would just want to keep. So I'll share all these slides with Marcia. She can, have them as a resource for everybody. And then you just be ready for the tax year. And I think that is the end of what I had prepared for today. And just as a goal to complete your bookkeeping, because that's what I do every single day is bookkeeping. So, lots of different clients, lots of different businesses, but I would say as a once a month goal, collect your receipts for the month so it doesn't add up to be too much. You can spend hours doing your bookkeeping or just a little bit each month. So does anybody else have questions or anything I can try to answer? Okay. Miss Marcia, do you have anything for us?
I don't, but I think Nathania might have her hand up.
Oh, I don't.
They should check it back down.
Okay.
No question, she said.
Delphina said,
But-
what's your recommendation for bookkeeping? Do you mean bookkeeping software or just in general, like how to do bookkeeping? So software. I actually really like Wave. Wave is one of the one of the free softwares that are really, really nice. QuickBooks, I think, is the most complicated one, but you'll have more resources. So that would probably be my second choice if you're going to commit to a software. Then there's so many resources and free webinars and things like that. And with that, yes. So if you have terrible internet service, you can get QuickBooks Desktop, and it's usually around $150, but you can use it for years. And so you just load it onto your computer. Make sure you back it up like onto a thumb drive, because if you like, I have a laptop and I break my laptop every 2 years. So it's really great to be able to have a backup in case something happens to it. Most accountants will work with QuickBooks. So if you ever have to move to a different accountant or something like that, but the desktop version, then you don't have to have internet for it. The other thing is you can just use Excel. If you have, less than $80,000 or $90,000 a year in receipts, Excel is really manageable to be able to manipulate pivot tables and to create lists. We even have a way that we download Excel from a bank. So we download the bank account in Excel and we categorize every single transaction, and it's bookkeeping, but it's on Excel. So I think, and that's also mostly free if you use Google Sheets. And Summer says she likes Wave. I really am a big fan of Wave. If you can have enough internet or sit at a coffee shop and do it, I think it's a great software. Back to you, Marcia.
Thank you, Angela. I'd like to thank everyone for coming. If you have any questions, feel free to email me, marcia@nativestartup.org, and we will see if we can have the video up in a day or two. And I'll send out a link to everyone that attended. And thank you for your time, and If you're interested in our next webinar, it's Creating Your Personal Budget. It'll be presented by Christine Laughter in 2 weeks, August 11th. Bye, everyone.